There we go for one more session trading NAS100. And I'll share a chart right away here. To NAS100. Yep, not a lot to say before we start trading. Let's go just to the daily here. Pretty quick. We had a very green day yesterday. People were not expecting this green day after Trump's declarations, and the guy says things that make the markets crazy, and I don't know why I'm not being able to share this correctly. We're right about to open. Oh, this is not what I wanted. But anyway, I don't know if you are seeing anything. No, you're not seeing anything. Let's see. Stop sharing and share again. Maybe now you can see it. Okay, now you can see it. I'm gonna just change to this one here, the US 100. US 100. Just what? 1 minute to go. Oh, I don't have a lot of time to go through the charts here, but let's real quick uh, go here and see what's going on in the 4 hour. Yesterday we had a very good day, like from Sunday to Monday. We went like 400 points to the upside, but since end of the session, mid session yesterday, we just fell and we are in a perfect downwards trend since we touched the view up in the European session a couple times, and now that's what we have here. Okay, this point is not exactly very a okay. We are 4 seconds for the market to open. I'm not seeing any entries now, but I'm looking more for longs, even though we are short. We are going lower. But anyway, let's see. Uh, this point here, we just made what from the bottom as well. Let's see here. Yeah, it's a 200 point range from yesterday. Long, but I will wait a little bit. Uh, let's see the next candle. But I'm not gonna jump in right away. But it could really be a good entry from there. Let's just wait to see what's gonna be the formation there. This is looking really beautiful candle. Yeah, it makes total sense. Maybe I'll try to enter from the tip of the week. Let's see, which is 630. But it has to be in this candle. If it doesn't come in this candle, fine. That's where I want this price to enter this. In the futures is 728. It doesn't look like it's coming back there. But anyway, it was a good start. Still have 22 seconds. If it gets there, I will try shot from here. No, but it's not coming back. It's not coming back. Like we have a huge gap to fill from yesterday. If you look here, uh, we closed yesterday at 21,754. Like it's a reasonable gap to fill. And I knew this would be a good entry, but I wanted to go from lower, so that's why I didn't get involved here. But it was looking very bullish at from the beginning. Well, okay. This is a beautiful trade. Look, if you had taken this, it would be zero drawdown. Now we have this point which could be resistance. Let's just mark it down here because it could be resistance at 691. We don't have any news catalysts for today. At least not the most um, obvious ones. We have J Power, Fed Chair J Powell testifying to, I think, the Senate today. But I don't know, it's a joint economic committee, so it's both the Senate and the House. And depending on what he says there, it's 3 p.m. GMT with UK time, and for the US, it starts at 10 a.m. So might be we could see something here, but not a lot. Oh, look this here. This is something that I started to see in the charts. Look, it came all the way down this candle here, 158 GMT. Look how beautiful this is. Oh my goodness, I should have entered here, but I waited for a bear entry. Now I lost a 53 points trade. It's fine. Okay, I just wait for a new setup to align here. But anyway, look, this is a very good sign of reversal. If you see a candle like this at 158 UK time or 8:58 New York time, it is a 9.4 point candle, which for pre-session is a reasonable candle. And then you had 1, 2, 3 candles that covered the entirety of it. So this is a sign of reversal. This is a sign of reversal. This happens all the time, and it was just some time ago that I started to visualize this, and this happens all the time. Um, Look, a big candle, in this case 13, which is quite reasonable for morning or after the opening. Like you have maybe an hour and a half of very feverish activity, and then it just uh, retraces. And then you see one, two, three. Look, three candles covered this, and after that, we went down. So this is something that I will start to point out here for you guys. Exactly here. Usually, I would uh, enter a trade like this. The a bit dangerous to short. Uh, but anyway, let's see how it's gonna behave now. If it breaks possibly 7-7 level here, we could try a short. Let's see. It's gonna attack the 677 now. Let's see how it's gonna attack it. We have how many points to the upside here? Oh, this is a good, yeah. Yeah, let's see. Let's see how this candle is gonna end. Very important. It's the first attack to this point. The first thing I want to see to enter a short here is to see this attack fade. So I want to see maybe the 693 700 tested again, then in the next candle or the candle after it. Like I expected, it's holding the level. Yeah, and it's going up. Yeah, maybe I want to see like it touching these weeks here. Otherwise, we will have to wait for it to come to the 671 come back, and then attack the 671 again. But I'm still thinking about this level here. Okay, yeah, like I said, waiting for the weeks to be touched. And then this is important because then we are going to see whether the buyers are still in, or if this is going to become like a um, like a point of selling. You can call it like a supply zone if you want. But anyway, if it comes back, if it goes up, it's still like the buyers are still in control. But if it attacks again the 677, we might be seeing a reversal there. But at the same time, we cannot deny that we are still in an uptrend from the opening. Okay, and if it goes to the 700, comes back, and then goes back to the 700 with the right setup, might be a good point to enter. So this is where we are now. We either try a short or a long, depending on how the price will behave within this very narrow range we are looking at, between the 700 and the 677. It's attacking the 700. This is very, very important. It's even better that it's attacking the 700, because if it reverses to the 677 again, we will probably see the prices going a bit lower. I don't know how much lower, but lower enough to get into a short. I mean, but if it fails to get to attack the 677, and instead attacks the 700 again, then we might be seeing for the formation of a good uh, long setup. So that's where we are now. Let's see how it's going to attack. If it attacks the 677 with a lot of strength, I'll be looking for a short entry. Okay, it's attacking the 700 again. Mm, but it wasn't very strong attack. Now we are heading to the lower portion of this small range, and depending on how the price behaves there, we might be looking for a short. Okay, it's a good attack. Like the session today is supposed to be kind of blendish because we have at least no obvious catalysts. Like I said, Trump can say anything at any time, but at least you have Jay Powell testifying as well. It's gonna start in 10 minutes, but anyway, those are not uh, obvious catalysts, and when we have no catalysts, we usually have no big shifts in price. Yeah, no, we are far from having a good attack there. Now let's see how the price is gonna attack the 700 again. Or not. Yeah, this entry here would be something in my playbook if it had come a bit lower before, but not from there. That's not how things are. I need to see it coming lower in order to believe in this as a, a good point to enter a short. It has to attack at least here the 677. And now we're going towards the 700 again. So maybe the oh good. Let's see the next candle. I don't want to see this going too over. Oh my goodness, this is just going over. Yeah, if it doesn't go too much, if it doesn't break it too much, maybe we can find an entry there. That if it breaks too much, it becomes a bit interesting. Okay, retraced. Yeah, it retraced reasonably. Let's see this next candle if it's gonna give us an opportunity to jump in. It's not the most beautiful of the setups, but since we have a very since we had a very bullish start in the session, let's see this next candle how it's gonna end. Okay, I'll try a buy from here. wasn't a very good idea, but let's see. Okay. Yeah, it's not reacting like I expected. Yeah, it's just going down. I think this trade wasn't a good idea. Okay, we lost it. Actually, I didn't lose it yet, but anyway, I don't think we are going to. Yeah, it's not looking very bullish. Maybe I should have closed, but anyway, now I'm gonna leave it. Uh, just play around. My stop loss was like 2 points below this. That's why it wasn't touched. Going south again. Yeah, nothing that we can do now. Let's just leave the position playing. And if it doesn't work, we try to wait for a new. Yeah, now it's going south and it doesn't look it's gonna go back. Okay, didn't work. Now he just touched. Oh, the Fed chairman started to talk. Jesus Christ. Okay, yeah, the guy started talking and maybe he said something. Yeah, it was a bit dangerous to leave this position open, but anyway, that's what happened. Yeah, I'll wait for another. Jeez, he destroyed the position. Can shoot further away. I'll even turn on Bloomberg here to see what's going on. No hurry to adjust policy stance. So, what he's saying is higher for longer.
Follow the general direction of the administration. And the Fed has already taken down some DEI web pages, but he's not going to say anything that would probably lead the senators to criticize the Fed's position on that, except perhaps for that monetary policy framework. We're looking for CPI tomorrow, year over year, Mike, at 2.9%. The core number at 3.1%. Still a long way off from the Fed's target. I know, they prefer PCE to the Consumer Price Index, but is there any push inside the Fed to work and get this inflation number back down closer to 2%, or are they comfortable with 3%?
No, they're not comfortable with 3%, and the consensus among all Fed officials is they are going to work to get inflation down. They're going to keep the pressure on, which is one reason that they're in no hurry to cut interest rates. Now, I suppose you could read Beth Hammack as the most hawkish of them all, suggesting maybe they might even have to raise rates, although she did point out some ways in which inflation has been easing. But at this point, the Fed is going to take as firm a stance as possible on inflation.
I want to talk a little bit about political pressure here. We know that Jerome Powell is going to be getting some tough questions from both sides of the aisle. Of course, we were just walking through with Stuart Paul what we're expecting Elizabeth Warren to say, for example. I want to talk about the man at the top, though, Donald Trump. I thought it was very surprising on February 2nd. He said that actually holding rates steady at their last meeting was, quote, the right thing to do. It seems like maybe some of that pressure coming from Donald Trump has eased a little bit, Mike McKee. I know it's early yet.
It's early yet, and of course, Trump has a tendency to change his mind on a moment's notice. So we don't know exactly what he will think of all this. But members of Congress are going to try to, especially Republicans, divine what they think the president is thinking. So you may get some tough questions about monetary policy going forward, or as you point out, on Capitol Hill, you get a lot of tough statements as opposed to questions. But Powell is going to try to take as neutral a stance as possible, say they stay in their lane, they do monetary policy, they don't comment on fiscal policy, they just react to whatever happens to the economy because of those policies.
When we think about the course of inflation as well, how much will he be peppered around just the direction of inflation as it stands today? I mean, CPI is not out until tomorrow, PPI Thursday. Is that going to be the bigger event?
The direction is lower, right?
But a lot of investors concerned that it's stalling, and the stalling of it is what is really causing some chorus of alarm here, or at least enough to push out any expectation for a rate cut to as late as September.
Well, it's interesting. If you look at Beth Hammack's speech, and of course she's the most hawkish of them all, she does point out some areas in which inflation is starting to improve, including on the rent side, which should push down inflation overall as it works its way into the way the Bureau of Labor Statistics calculates the CPI. There are some other areas, she notes, where prices are starting to ease, but there are still some areas that are firm, and that's what the Fed has to be concerned with. One thing that's likely to happen is that year-over-year inflation will start going down for a while because of base effects. Last year's inflation higher, so this year it would take more to push it up. And we may see some improvement going forward, but the Fed's not going to hang anything on that. They're not going to say by June we could be cutting rates. They're not going to give a timetable at all at this point.
If you look at the chart, I mean, a year-over-year chart of the core, Mike, which I'm sure you look at on a daily basis, we peaked at around 6.5%, a little bit more, and we are coming down. The last reading, I think 3.2%. We're looking for 3.1 tomorrow on the CPI core. So it is coming down, maybe not quickly enough for a lot of people. Here's a great picture of the Bloomberg,
I took a small shot from here.
In terms of
it's working,
why Donald Trump isn't pushing back,
but
Katie brought this up.
let's see. Swap is at 0 already.
That they're more concerned with longer-term rates, more concerned with the 10-year yield.
At least I will make.
What do you think about that approach? Because we heard
for the
previously, you may remember, from Robert Rubin about 30 years ago. And the Clinton administration had a tough time with yields as well.
Well, that might be a lesson learned by some people in this administration. The Fed controls the short end. They do not control the long end. That's the markets. And so Jay Powell has said that before, and he probably will repeat it at some point over the next 2 days. And if the markets think that we have a potential inflation problem, or conversely, a weakening economy problem, that will show up when you get out to the belly 5/7 and farther. The Fed can't do anything about the market reaction, and so maybe the administration is recognizing that where they are, the Fed at the moment, is about as good as they can do given the information they have.
I think that's really
Yeah, it's
interesting,
gonna close, I
those
think.
comments, and I haven't had a chance to
Okay,
talk about it with you guys because it
closed.
feels like this time around,
Okay, closed.
really focused on the bond market, not as
Didn't
much on the
work
equity market, which is really interesting. It's the bond
as
market, it's the long
expected.
end, and to your point, there's not much they can do when it comes to the long end.
Well, there is, in fact, something that
We
can
had
be
like
Quantitative tightening.
21 points.
I was going to point out that the Treasury's gold holdings at
Fine.
161 million ounces are currently valued at $11 billion, or $42.22 an ounce. Mike, you may have seen this story in the
Now
FT
it's
a couple of days ago.
pretty nice
If
for
they mark
a long
that
here.
to
Let's
market,
just see the
gold
next
holdings
candle.
would be worth more than
If it's gonna align
$750
with our
billion.
strategy.
And they would then have to, if they
If
use
it
the repo
does,
agreement with the Fed, have to issue
I
far
will
fewer
try a
treasuries.
long.
There would be less supply in the market, and that people would, I guess, be willing to pay more for those treasuries, driving yields lower. What do you think about that, Mike?
Well, it's certainly an accounting sleight of hand that could be done by the administration. Previous administrations have thought about it and rejected it. They're not sure the market reaction would be as straightforward because people recognize it's just accounting on paper as opposed to what your debt situation actually is. But it is something that they could do, and if the government wanted to do that, the Fed would pretty much have to go along. So I suppose that could happen. It's not getting a lot of traction, interestingly enough, Matt, in the markets. You don't see a lot of talk about it from the analysts at this point, although the FT did bring it to the fore this week.
Well, who knows? Maybe Elon Musk is watching right now, and that will become
No.
a Doge initiative. But this is more of a treasury conversation. But in terms of what
No, it can
impact
work,
the
but
long
it's
end,
not
I
aligning
suppose
with
they
his
could
strategy. So
mix up their issuance mix, their
I'm not
schedule
getting
there.
it.
But we know, Mike McKee, because we got the refunding last week, that they don't really plan to deviate from what Janet Yellen was doing.
Well, I think what's holding them back at this point is both not knowing what their own president's policies are going to be and how those are going to impact interest rates, but also the fact that they have to come up with a government spending plan by March 14th. And also that's when the debt ceiling, the debt ceiling actually could maybe go into the summer, although they're saying they have a little less money on hand than they thought. But those two issues will keep them from, at this point, making many changes in what the maturity, issuance, and size is. So at this point, it makes sense that Scott Bessent is saying we're not going to make any changes. But I would imagine that once you get into the summer, if those problems get behind them, that he might follow through on what he said about wanting to term out some of what the Fed or what the Treasury is selling.
Michael, no one wants to talk about kind of, what is it, the ugly stepchild here? What is the saying?
Redheaded, I believe.
Redheaded.
The ginger stepchild.
The quantitative tightening plans, the Fed's balance sheet. No one wants to talk about it. But I mean, ultimately, what does it mean in terms of their ability
Look,
to control
I will even share another screen here, which is not this one. Is the screen
more refunding that could be coming sooner down the pipe?
that I
Well, depending on how long they keep going and when and how fast they stop, it could have implications. But more likely of what the Fed is going to be putting, what the Fed is going to be letting come off.
account
Which people use for
that I'm trading now
hypothecation
with
for
Apex.
repo transactions. If there are fewer treasuries, then that's going to drive up the.
And we are
the
almost
cost of
filling
lending.
up the gap.
And so that is an impact.
You see that this trade would have worked.
So far, the Fed's not giving us any hints of when they think they're going to stop. Markets are betting somewhere between the summer and the end of the year, but we're still waiting for Chairman Powell or a better clue. He does say that they continue to lower their balance sheet, but that's the only remarks on that he has in his prepared testimony.
By the way, I think no one wants to talk about the elephant in the room.
Thank
Right?
you.
Maybe it could be a good entry this
And
point.
I'm not making light of this, but the idiot is beaten like a redheaded stepchild.
What?
I know,
That's
it's
what the
horrible.
elephant-
It's
What
horrible.
is
I'm not.
television?
I think it's awful. I'm
You know,
just.
we have our Barry Knapp from the Ironsides writing it also about that idea here that the Fed has been, so to speak, controlling the back end of the curve, and there is that kind of thought out there around this quantitative tightening plan.
Okay.
We'll also run issuance as
I'm
well.
trying my long thing here.
We're talking about with Mike McKee
Let's
here, and Mike McKee, of course, we have the Senate today, we have the House tomorrow. Are we expecting any differences there in terms of tone, in terms of noise and substance?
Let's see, if it doesn't work,
You usually get a
fine.
big difference between the House and Senate.
I
The
think
House
it's
tends
very
to be more
likely
political.
here.
The Senate tends to focus more on issues. I noted that Tim Scott, the chairman of the Banking Committee, has already said that his
If
primary
it doesn't
line of
work, if I
questioning
lose the
is going to
street,
be
I
on
will
bank
just
regulation. So I would expect
stop.
more of that. And of course, Elizabeth Warren will, as always, come loaded for bear. She's probably in a bad mood about the CFPB. So she'll probably focus on things like that. Whereas the House will be much more interested in scoring political points and in getting some video to put into TV commercials.
Jay Powell speaking now. Mike McKee, thanks very much for that. Let's listen in to the Fed chair.
Achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong overall and has made
stop at
significant
0
progress toward
now.
our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated.
Okay, it's coming
We
back.
are attentive to the risks on both sides of our mandate. I will review the current economic situation before turning to monetary policy. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose 2.5% in 2024, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have declined in the fourth quarter, but was solid for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid and appear to have stabilized. Payroll job gains averaged 189,000 per month over the past 4 months. Following earlier increases, the unemployment rate has been steady now since the middle of last year, and at 4% in January remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance. The labor market is not a source of significant inflationary pressures.
Okay.
The strong labor market
Didn't work again, but I didn't lose anything because it went 10 points to the upside, and I always set stop loss at 0 when that happens. Let's now wait for a new push. And it's becoming very dull, this, I don't know if I will keep trading this because it's just not doing a lot. Now it's going up. Let's see how it's going to attack the 820. Remember that this is futures. It's a bit different from the index chart.
We can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. We are attentive to the risks on both sides of our dual mandate, and policy is well positioned to deal with the risks and uncertainties that we face. This year, we introduced a peer review military policy strategy tools and communications. The framework used to pursue recreationally assigned goals of maximum employment and stable prices. The focus of this review is on the FOMC's statement on long-term goals and monetary policy strategy, which articulates the committee's approach to monetary policy and on the committee's policy communication tools. The committee's 2% global inflation goal will be retained and will not be a focus of the review. Our review will include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. We will take on board lessons of the past 5 years and adapt our approach where appropriate to best serve the American people to the New York calendar. We intend to wrap up the review by late summer. Let me conclude by emphasizing that the Fed will do everything we can to achieve our dual mandate goals that Congress has set for monetary policy. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. Thank you. I look forward to your questions.
Thanks, Jeff. Certainly with words and actions of a global impact, you have the opportunity and responsibility of leading this country in the right direction economically, and I thank you for your commitment to having a conversation following us about how you do that well. You know, I had a conversation yesterday, so it was frustrating, some of it's illuminating. Early in the year, my goal is to make sure that the American people, specifically those working paycheck to paycheck, have more opportunities to succeed. You have said the Fed is not against innovation, and banks are perfectly able to serve crypto customers as long as they understand and can manage the risks. You have admitted that the threshold has been a little higher for banks engaging in crypto activities. Last week, I had a hearing on banking and also the federal banking agencies, particularly the Fed, use reputational risk as a tool to encourage the debunking of certain legal industries and law-abiding citizens for political reasons not tied to safety and soundness. Debanking is a top priority for this committee, and it certainly is for me, and one that I believe is a bipartisan issue. Will you commit to working with this committee to end debanking, including working with the new Vice Chair of Supervision once appointed to revise the Federal Reserve supervision measures to remove reputational risk as a tool to win in on political topics?
I'm happy to make that commitment.
Thank you, sir. Accountability is very important. I would like to think accountability is a priority for everyone, especially the Fed, given that failures in Fed supervision have resulted in the loss of billions of dollars. They're following the failure of the Silicon Valley Bank, which was in part due to the failures of its regulators to identify previous misconduct and interest rate and liquidity risks. We have yet to see any regulators.
I'm trying this little short here. It's very risky, but let's see. Maybe it wasn't a good idea. This was a bit impulsive, to be honest.
And the judge of the FDIC has begun the process of holding SVB executives accountable. That's good news. But no Fed employee has been fired, put on probation, put on performance improvement plan.
I just closed this position. It wasn't a good idea at all.
Employee failure. Please explain to me why Fed employees are held to a different standard from others than everyone else.
I'll just try another one if possible. I will not count this as a trade.
So we've actually done quite a lot in response to the events associated with Silicon Valley Bank. So we've done many more things. In terms of specific accountability, what we found was this was not a case of malfeasance or nonfeasance so much. It was a case of people who were carrying out a specific playbook that failed to cause us to act in time for these things. It wasn't actually particularly fair to the employees to say you violated our practices in some way. That wasn't really what happened. What happened was, I would say,
a lot of focus on process and on governance and controls, and not enough focus on basic bread and butter banking, credit risk, liquidity risk, interest rate risk, things like that. So, as we discussed yesterday, we took very substantial steps to avoid further spread of those issues, and that was successful. But I understand the point on accountability. I think this is one of the areas where we see the approach to looking at safety and soundness and the number of MRAs that went really documented, but no action is taken. That leads me to the conclusion that individual employees, supervisors, should have been held accountable for that. I'll move on, but in the past, you've supported tailoring regulations so that we ensure banks of different sizes thrive and to preserve our diverse banking system. Will you commit to working with me to make sure that financial regulations do not impose more burden than is necessary? I say that this comes up in a number of conversations with community banks and regional banks that continue to stress that the cost of the regulatory framework around them isn't just hard to suppress it. A lot of the banks suggest that the cost per employee for the regulatory framework is $10,000 per employee. I think we can do better than what we were thoughts on that. First of all, we're committed to working with you on that. We do try to avoid excessive burden, but I think it's fair to take a fresh look on factoring on e-banking. I think we all see, both from what we're hearing and on the outside, we hear a lot of people talking about that. And it's time to take a fresh look. I think we don't intentionally do these things, but sometimes regulation gets things to happen, and we need to be working on that. I appreciate that.
I see the next candle. Maybe it's going to give us an opportunity to go long. If and this is going to be the last trade, whether it works or not.
OCC and other regulatory agencies and specifically to debank certain industries. And that is the point that I'm making and one that I think we have to solve. If it's legal in America to do business, we should do our part to make it that.
Thank you, Mr. Chairman. So over the weekend, President Musk and acting director vote effectively shut down CFPB. No more pop-up being taken out for February 4 in South Carolina facing legal foreclosure. No more pop-up being taken out for your grandma whose bank account has just been taken over by a scammer. No more pop-up being taken out for people getting ripped off by giant credit card companies.
Okay.
Here
in
it also means that the CFPB is no
818
one of its most important jobs.
79
Examining big banks to root out illegal conduct before it happens, or at least stop it before it happens.
818
Check out if the CFPB
818.
isn't on the job right now, then who is administering JP
This here we are going to stop over here there.
compliance exams to ensure that they are following the law?
Senator, I believe that you would know that Dodd-Frank moved all authority for examinations in the consumer space to the CFPB. We still have some jurisdiction.
We'll talk about that in a second. To my question, please. If the CFPB is not there examining these giant banks to make sure they are following the laws and not cheating consumers, who is doing that job?
So no other federal law.
No one. In other words. So thanks to President Musk and the CFPB acting director vote, Wall Street banks no longer have to show the bank examiners.
Okay, stop loss at 0 now.
Opening up accounts people didn't ask for, like happened with Wells Fargo.
And I will set a take profit.
But CFPB has jurisdiction only on banks that have more than $10 billion in assets. So what's happening in thousands of community banks all around the country? Those that have less than $10 billion in assets. So check out, as you know, the Fed oversees consumer compliance for state member banks that have less than $10 billion in assets. Has the Fed suspended consumer compliance exams?
Very good, very good, very good.
Is the Fed still on the job to make sure that those smaller banks are consumer financial wants.
Still on the track, business as usual.
All right. By forcing the CFPB not to do its job, President Trump, Elon Musk, and the author of Project 2025, yes, are giving Wall Street banks an unlimited get-out-of-jail-free card so they can cheat working families, even while community banks continue to play by the rules. You know, for any Americans who have money deposited at JP Morgan or Wells Fargo,
All right. We got out of the trade. But anyway, we recouped our loss, which is very good. And now we're even.
to make sure that they aren't cheating consumers. You know, if I had more money in one of those giant banks, I would think about going to a smaller bank. At least right now is a whole lot better. Now, at the same time that the CFPB is under attack, the Fed is buckling to pressure from Wall Street
We are
to
even
release
now.
safeguards for the too big to fail banks. During the first Trump administration, on
It's
November,
not
the
sharing.
Fed weakened big bank stress tests, including by giving the big banks some of the answers to the test in advance. I called you out here in this community.
All right.
You would not give those banks the whole answer key. And quote you back, you said, complete knowledge of the models could lead to a modern monoculture in which all firms have similar internal stress testing models, which could increase the total of
Right
but several weeks
in the
after the
gap.
Fed announced the
Okay.
best plans to do
Right in the
exactly
gap.
that, had all of the answers
Uh,
for giant banks. Chair Powell, why is the Fed about to propose a rule that directly contradicts your own testimony and in your own words would render
whoa,
stress
now it's
tests
going over
tedious?
it.
Celebrating a
Maybe
massive
I should have been
program and shifted very
less
substantially
strict with my
and reviewed actually
um,
the stress tests to remain resilient to that. And so we're making changes to accomplish that.
Well,
with
the
my
truth
trailing
is, the
maybe.
changes you've identified
But anyway,
are
it's fine.
just making those tests tedious.
Important is
They
that we got a good
are going
trade.
to reduce shareholder payouts and leave this economy more vulnerable to a crash.
Now,
The Fed is not going under to bank lobbyists
yeah,
or
we are
policy makers.
right
People will
in
suffer. Wall
yesterday's
Street will
gap,
get bailed out.
which is yesterday's close. Okay. So in the chart that doesn't count the pre-session or the Asian session. So we are right in the gap. From here, we could keep going higher because this was the trend yesterday, or we could reverse, but we have to see some stuff in order to think about reversing here. For now, we are still bullish here. We're still bullish here. And I will consider this here the formation of a resistance. This is the first attack. If we have a second attack here and the right conditions, I'm gonna try a new long.
Anything else you'd like to add before you thank you, Mr. Chairman. As we continue to prioritize the stability and resilience of our financial system, the ongoing Basel III rulemaking process has remained front and center in shaping our regulatory framework. I guess I was rather outspoken with my opposition to the original proposal, and further work was stalled at the end of the last year. But I guess my question for you today, sir, is could you provide an update on the Federal Reserve's progress in finalizing the Basel III ending rulemaking process?
I'd be glad to. So we remain committed to completing Basel III endgame. We think it's good for U.S. banks. It's good for our economy that there be a global standard beneath which foreign banks can't fall. And that was one of the big ideas behind the whole Basel Committee approach. So where it sits now is we await leadership arriving at the OCC and the FDIC. That seems to be happening, and when that happens, we're going to sit down with them and work our way through to a Basel III endgame proposal. I think we can do this reasonably quickly. one that is consistent with deposit requirements and also consistent with what other large jurisdictions are doing. I'm optimistic that we can do that for within the committed to doing that. We always want our banks to be competitive with European banks. I'm just curious. There was a proposal that was in front of you, and I'd like your thoughts on this. It was estimated to increase our bank's capital by 19%, which I think may very well have created a potential disadvantage within the U.S. institutions versus our European counterparts. With any new proposal, um, what's your thoughts? Would you make a commitment that this would be a neutral approach with regard to capital?
The main commitment we make is we'll work together with new leadership at the other banking agencies to do something. But that's certainly, I've said many times in this committee that I think that the level of capital in the largest banks is about right. And so it'll shake out somewhere in that area.
Our expectation would be, and the markets would expect that it would be neutral with regard to capital.
In that range, but I want to defer to our new colleagues and get their views as well. But that's a good start.
Okay, thank you. The Federal Reserve's partnership with the U.S. Treasury plays a central role in supporting our nation's payment infrastructure, which processes a vast range of daily transactions, from federal benefit disbursements to debt obligations. Could you outline the Federal Reserve's role in supporting and managing the Treasury's payment systems, including how the Fed works to keep these systems secure, efficient, and capable of handling the government's high volume of daily transactions?
So it's a complicated set of arrangements, and I'll try to summarize.
This is not a, this is maybe this is a good entry for a short. The problem here is that we are still within the structure of higher high, higher low, higher high, and higher low. And before we break, like at least this 8:30 here, we confirm this break. It's not in the playbook, so I wouldn't take this trade, but it can work because we are in the gap. The gap is a very interesting resistance. So
Is the system safe today?
I believe it is. I will tell you, we are very strongly committed to the integrity, efficacy,
but it still have a very strong bullish push since the opening. So
One last question
um,
for you, sir.
we could
The failure
still keep going higher. Look,
determined
you see,
I'm just curious, recognizing a lot of banks out there look at this, it costs the other banks in the system a lot of money to pick up the costs involved in the losses. Nobody's been fired, but you did indicate that it was a failure in the playbook. Has the playbook been revised, or can we expect that it will be revised?
if it attacks the seven, the 850 again, I am probably maybe trying a long and a long, depending on how the price behaves there.
to stop it. But a lot of it was just not focusing enough directly on what was a very large amount of interest rate risk, a large portfolio.
But today is not very beautiful market, to be honest. Very few entries, and I ended up entering a trade that I shouldn't. That is not in the playbook anymore. Uh, yeah, like I said, this point is a very good point for a short, but I'm just not feeling it, and I already broke my rules once today. I'm not gonna do that twice. So leave it. And the problem with breaking rules is that if it doesn't go the way it should, even if it works right after that, I usually don't feel comfortable leaving the tree open. That's the biggest problem of not following the rules. Like you just don't know what to do. When you follow your rules, you know exactly what to do, when to act. But if you not like you do, you end up doing shit. That's what happens. The good thing here is that I don't hide anything from you guys, anything. But today is a dull market. It's not. It's just not playing out and we have this Jay Powell test testimony there in the Congress in the U.S., and that doesn't help as well. That doesn't help. Yeah, I will wait for more, maybe 20 minutes or 30 minutes, but the market's doing nothing now. So, like I said, it is this. There is this testimony of Chairman Jay Powell as well, and this is not helping at all the market. Yeah, there we are going again to the 850. Nothing happening. Let's see now. Let's see this attempt to attack the 850 there. It's very bland, very, very bland. We had a very good start. Unfortunately, it didn't retrace when we wanted. We lost the big movement of the opening. Then we made a trade just before um, Jay Powell starts talking, and that wiped our trade off. And now And then we entered this trade here, which gave us like 20 or so points. We regained the losses, and now we are right in yesterday's gap, and the price is really oscillating here now. I would like to see this 850 tested and the right conditions appearing for a long. Then we can think about a continuation and target yesterday's high. That would be the best scenario for a long trade. Oh, beautiful. That's what we wanted to see. Then we have to wait for the next candle. Wait for the next candle. Beautiful. For now, it's beautiful. It's just wait for the next candle. If we are going to enter this trade or not. Oh, it's oh no. That's not what you wanted to see. But anyway, nah, nah. Would have to retrace all the way back to 852. Otherwise, I'm not getting. Oh, oh, all right, let's go. Close here, 852, 831. Let's see. 853. Our stop loss at zero is 863. Let's see. If this trade fails, this is gonna be it for today. Okay, stop at zero now. I'm not losing this trade anymore. All right, it didn't hold. It didn't hold. It's fine. What is not fine is be in 10-point uh, profit and lose a trade. That is not fine. So if it closes when we were expecting it to go higher, no big deal there. Okay, look, this is so bland. I will still wait for a new setup, but now I'm feeling that it's going to go up, but I don't like bumpy markets, so especially since I am net zero now. I recoup my loss. It's better to wait if there is any clean setup. Otherwise, I'll just sit out. We are in a very, let's say, uh, significant area, I would say, because it's exactly yesterday's gap. So it's the price that closed yesterday. Um, Now it's going back to where it came from when we were up. Let's see if it's gonna break now. These would be, yeah, the third. Yeah, maybe we could enter again depending on how it goes. Oh, you see that? Yeah, it's a 10-point candle. Oh, went all the way back. Yeah, no, 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 no. It's not a clear setup. It's like I'm not entering in anything other than at least an A setup. I wouldn't say A plus, but A setup. A plus is way too much, but an A setup would be enough to try to enter this market again. Yeah, this there could be a good entry, but poo poo. No, no. Very, very poor setup. It can work, but it's not the kind of setup that we like. Thus, we are not getting there. Yeah, now it looks like it's sustaining the path towards the top. Maybe let's see one thing here. Maybe if we go down, back down again. Yeah, this is interesting. This could be the resistance. Yeah, yeah. Depending on how the next candle behaves, or if it attacks for the third time this 870 area here, 868. So. Oh, no, look. Okay. Let's see this attack. It's looking quite reasonable. Let's see how it ends. If I take this, I will decrease a little bit the position. Okay, let's see the next candle. If it attacks the 870, we could be in a good spot for a long. Look, 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 look. This is looking beautiful. And actually, this we are very close to yesterday's high. No, yesterday's high. Uh, yeah, yesterday's high. Yeah, yeah. But yeah, no, no, no. Let's wait for a new attack if it happens. Along from this point, there could work for an 865, but it's just not aligning with the playbook. So I entered the trade almost like that, just below, and it didn't work. I'm not gonna enter a new one like that. So all you see is just breaking down. So there are two things when we are very close to yesterday's daily. Uh, we could be heading south now, or we could go breaking uh, the the highs because uh, we still have some room until the all-time high. I don't think we're going there today because, as I mentioned, like at the beginning of the session, we have no catalysts, just this Chairman Jay Powell testimony to Congress, and this is most of time no big deal. Okay, look, now it's breaking. We can't say that it's a bad thing for the uptrend. Could be good actually. Um, this 826 could become a good support. It's not yet. It could become, or it can decide to just keep going higher from there, which would be even more reliable setup, to be honest. But I'm not seeing the reversal yet, to be fairly honest. Especially because I didn't see that 321 rate candles that I showed you in the beginning of the live. This pattern is very strong to sign a potential reversal. Not that every reversal happens when only when you see that, but when you see that, it sometimes it's very powerful, and it didn't happen yet. So, and if we attack the 870 again, it could be a very interesting long, although we would have maybe 20 points to the upside until yesterday's high. But I would be interested in longing from 824 as well, depending on the behavior of of the price here. But I think because we are almost 11, it's not gonna be until 11:30 that it's gonna happen, and I only trade until 11:30. So you see, very big push now to the downside, like 40 points to the downside. I mentioned that this could be a good setup for a good entry for a short, but it's just not aligned with the playbook. We are using. So I broke the rule already once today, so I shouldn't have done that, but I did, and I'm not gonna do it again. Discipline. Discipline and consistency are key for this job, buddy. If you don't have it, just give up. All right, look, this is looking beautiful, you see. Um, but first, this is not a support, all right? This is not a support. Um, I would consider something if it goes uh, up and down back here again, and then it reacts beautifully, beautifully um, towards a long shot. And if it happens, then we can consider a a trade, but not now. It's just not there yet. It's just not there yet, but there is a possibility. I would actually, I would love to see like this 822 or even a bit lower 820 area here tested. This is a very good area to be tested because we broke from here. Um, the trade that we took it was from here. Uh, so this area would be a perfect, and nice, very nice support. I would be willing to enter from here, but not blindly. Never blindly, guys. Don't try to predict the market. React to it. The reason I lost the second trade was I predicted it and I was wrong. The first trade, yeah, I should have been more careful, to be honest. I was just a bit, yeah, I think I precipitated a bit there. It wasn't the best setup, and I just maybe I got pissed because I lost the first entry of the day. And as much as we have experience and know that every day is a day, sometimes we get a bit anxious. That happens. That happens. If you trade and you say that you don't get anxious, you are not a trader. You are not a trader. You can get less anxious. You can try not leave the anxiety to domain you, but you cannot deny you have anxiety. It's impossible not to have anxiety. It's normal. All right, look, this here is a better point. Is a better point, but it's not still there. The setup we are looking for. And at this point, I would enter like very good entry here, like 10 micros, which is quite nice. I go the max I go is 15 micros in this account. So because I have two, it would be like 30 micros is my max. This is quite nicely 10. So in the two account, it's like $4 per point. $4 per point? No, $40 per point. $40 per point, which is quite nice. You know, 30 points. It's $1,200. And that would be my objective. Now, another possibility that's coming to my mind is a perfect test of this resistance here, which could be resistant, which is a resistance because not only because it reacted here in that from it just reacted here, but because it's yesterday's gap, and we are very close to yesterday's high. So and we reacted here to the downside nicely, like 40 points. It's not like a huge reaction, but the way the market is mild today, like we made from the open 134 points, like almost nothing. Uh, if we take into consideration the uh, very volatile sessions we have been seeing in the Nasdaq 100, it could be a very good point to short as well. And either way, I will go like 10 micros or 20 micros because it's like two accounts. Now we tested exactly the point we were looking for, but it's like kind of breaking it. So what I would do here is I may consider a new entry from here as well, short entry, right? From there, depending on how the candle comes back here. Because we broke this structure here in the 848, then we didn't succeed in breaking it back to the top. So if it happens, right? It didn't happen yet. I'm just telling you guys, well, how do I think? How do I see the price action? Like this, if this was a support, this is looking very good for for a long entry, but this is not a support. Okay, this is not a support. And why is that not a support? Because in my playbook, it's not a support. I'll show you why I don't. Okay, it can happen. Okay, it can work if you want to take a long from here. Maybe it work. It's going to work. But the problem is that this is a fake support. I call it because it just tested it from a very bland movement. You see, it was not a big movement. Although here we also have like this break, this resistance that became support. Okay, you could call that as well. But in these cases, I prefer to see at least two tests to make it become a support. And what's gonna be fundamental here is how it's gonna behave once it gets back to 830. Because depending on how it goes, it could either go a short, it could either be a short or a long. It's going to depend on how it's going to behave from there. If it goes there, anyway, because we never know what the price is going to do. If I knew the price is going to go to back to 830, I would short to there and then long again. It's not how the things work. So I said there's a possibility of the price going back to the 830, and then over there we're gonna decide whether we're gonna short or long this. I'm more inclined for a short at the moment, but I could change my my perspective depending just depending on and how it's gonna get there and how it's gonna react after that. We have like 20 minutes still to keep in the session. I'm not very excited to be honest, but let's see. Okay, good. It's doing its thing, not as we like to see, but it's trying to do. Oh no, not for a short, guys. Not for a short. It had to be more aggressive too, for a short. Yeah, it's trying to go lower, but it doesn't. It doesn't go. <clears throat> 15 minutes. 15 minutes. 15 more minutes and we go. Time for one cup of coffee. Then I go. Like Bob Marley said. But yeah, there's music, the song. Let's go for it. Since we're doing nothing here. This is the music. This is the song. One cup of coffee. Then I go to let you go. You tomorrow. I know you got my sorrow. One cup of coffee. Then I go. Whoa, this cup of coffee is coming, huh? Let's see. Let's see, guys. This is exactly what I want to see for a short. Yep. Yeah. Let's see how it's gonna end. Yeah, no, it looks like it's testing, and depending on how things go, maybe we changed our bias to long. It doesn't, as long as you don't get short and long all the time, change your bias is not a problem, especially when you are like very close to a resistance and uh, because that is kind of bearish, or and you are close to a support that is not support yet, but it could be. Yeah, but as it is, like no, no, thank you. Like that guy. Is his name Sam Altman said to Elon Musk. Elon Musk offered to buy uh, the not-for-profit uh, that manages ChatGPT, which is OpenAI, and Sam Altman, the CEO of this not-for-profit organization, just said no, thank you. And remember that uh, Elon Musk was one of the founders of OpenAI. Guy has his hands on almost everything that is important today. Like him or not, we have to reckon that the guy is a machine. He's behind everything. And now he's called a co-president of the Democrats. The Democrats give him that kind of importance. Yeah, now I'm back to my bearish bias here. Uh, Maybe because the thing is happening, I will not exactly stop at 11:30 or 4:30 UK time, but this will be the last uh, setup formation that I will watch for the day. So uh, I will just wait for the formation, for the confirmation of the setup or not, and just go away. Let's see. There it goes high. There it goes up. But it's good. Like I would consider this the formation of a support. This is the first attempt to break the support. If we have a next one, maybe it's going to be the time to short. But yeah, look. Here we have the formation of the resistance, the first attempt to break the resistance. Yeah, this could be a good point to enter along as well, like 847. Let's see what's going to be. Or if it's going to be something. Nah, for now it looks it's going to be nothing. Okay, yeah, I wouldn't be waiting too long from there now. It just it needed to go in this candle. If it didn't, just forget about it. Let's wait a little bit more. You guys remember, if you were here since the beginning, that I lost the first trade and I recouped the losses with some profit actually in the next trade I did. Uh, yeah, this like is a class C. I would say a class C long setup, but I'm not entering this. But it's a long setup. You could enter if you want to risk. All on you, buddy. Always. All on you. But I don't like it. I don't like it. It's going. You see, it is a long setup, but not the kind of setup that I'm looking for. I'm looking for a very clean one. This is far from being clean, but it's working. Very, very weak. That's why. That's why. It's not a kind of setup I like. So that's the game plan. I will wait for either the price come back to this 823 here and we see what's going to happen, or it goes higher to the 872 and we see what's going to happen here. From 872 I would be looking for a short. From 822 I could be looking either for a short or for a long, depending on the behavior of the price. This is the first. And maybe, look, maybe This could be a short setup from here, but I'm not seeing it now. We have to wait for the candle close. But if this is the thing, I would go very lightly here. I wouldn't go full. I wouldn't go full. Let's see the next candle, what it has for us. Depending on this next candle, I will short this. 836, 856, yeah. Yeah, it wouldn't be bad. Let's see. Let's see how it's gonna end. But I would take 15 points here if it is that. Let's see. Mm, mm. So it depends. The last five. Okay, I'll try this short. That's fine. Let's try. Let's try. If it doesn't go, it doesn't go. And then we stop. This is the last trade of the day. The entry is 826. Stop loss at 0 at 826. Okay, it's enough for stop at 0. I'm not risking very much, but the setup is not very beautiful. If it doesn't work, fine. No, it's gonna close. I'm not feeling it. Yeah. Okay, it's gonna be swipe it off. Yeah. Okay. Done. Whoa! Didn't expect that. Whoa! Good. Yeah, I said 15 points at first, but I'm gonna leave it open because let's try at least 30 points. Nah. No. This stop loss is fine. But if this candle closes like full bodied and it doesn't touch my stop loss, I'll just close and get some of this profit if I'm able to. Yeah, the right thing should have taken profits here. I take 2-0, but because I'm a bit greedy, I wanted more. Let's see. This next candle will tell us what's gonna happen. Are we breaking this? Two, four, eight, two, eight. Okay, almost 300, both accounts. Cool, fine. Okay, we did it. We did it. Fine. In the end, we made like $300 for a session that we were negative at first. It's not that bad. And why did I close this? Because this area could be a reaction to the upside. We were 300 positive. Why not closing it? Like, I like trades that just go. If they don't go, just take your profits and go. That's how I trade. I'm a scalper. I'm not gonna stay here the entire day. I take the opportunity when it happens. And just to end here, if you're still here with me, I'm gonna show you why I did take this trade. Okay, why I did take this trade, and it's very straightforward here. Uh, it's not that difficult to figure why I took this trade here. Yeah, you see that it's still going down. I think it's gonna break here, but anyway, it didn't yet. So why did I take this trade? Because we created a new resistance here. You could call it like supply zone if you want. Anyway, and then we tested once, and it didn't break. And then we tested twice. If it had tested here and and bullishly, I would have entered along here, okay? But since it reacted from it, this is the first reaction to the downside. And then the second reaction was the perfect, like for me, is the perfect setup for short in this case, which is like you have this inverted hammer here, and then a solid candle, and then you have like a very small candle here. What I call, you can find it weird, but it's like I call it like an elderflower. Don't ask me why I call it an elderflower, but anyway, and yeah, we had the elderflower here, and whoo, we came down. That's it. But the market is very bland today, so we didn't have a lot of movement, but that was fine. You see that it's coming back. It was good to have taken profits. Someone left a message here. King Store, done a pattern going up, so I'm pretty sure it's going out all this shit zone now. It's been in for ages. Wait for that drop and smash that buy button. Damn right. Okay, you can be right. Look, you can be right. I'm not saying you're not. It's just not what I do, buddy. I'm not waiting here for. I trade for 2 hours. 2 hours what I do, and I'm out. And I'm out now. I'm not waiting for anything else. Uh, I just made this, and I'm positive now. I didn't trade yesterday. Let's see if tomorrow we can get up. huge movement like 30, 40, 50, 60 points. Why not? And then we build a very green week. Okay, we're green already, but very small green. Um, so I'm pretty 90% sure it's going out. All this sheet zone, it's now been for ages. Yeah, I don't know which zone you're talking about and how long you're talking about, but maybe you are like thinking in the daily perspective, and in a daily perspective we can say that this has been here for ages. But look, for me that really doesn't matter. Let's see here if we understand what our friend here King Store just said. Let's see. Let's change the share screen here for all right, this one here. Is it this one or this one? Which one? Okay, we can see. I think it's nice. Cool. It was very good to have left the trade, and I left in a very good position yet, not on the top of it, but it was like the second best scenario. Look, let's see here real quick the daily and see what our guy is just saying. Um, Here we have the 4 hour support zone, um, which was like the opening was here. Um, yeah, yeah, actually it was. Yeah, when we were in the opening, we were here. Yeah, we have been in this area for like how many days now? We have been here at least since was this January the 22nd. So it's more than 20 days, 14 days, no, 20 days actually. Yeah, 20 trading days, but we have other days that are not trading days as well. But well, oh, now it's going down again. Look, yeah, this here, like I'm not gonna trade anymore because I don't take trades after 4:30. Okay, especially because I already took this short. But look, if this thing here breaks to the downside, we are going to see lower prices. Um, so if this is what you're talking about, maybe we will leave this area tomorrow because we have CPI and CPI could push us to the upside. But other than that, I see we trading around this area sometime. It's a very good area actually, like 500 points for scalpers. It's very good. But maybe if you are like trading swing trades, looking for 800, 700, 800, 1000 points, or even more. I never knew a swing trader for indexes. I see swing traders for stocks, for forex, even for crypto, but not for indexes. Yeah, look, it's being beautiful now, and even better. Look, if it comes back here, you see, and it tests brilliantly here, I will tell you this is a good entry for a long. Okay, but I'm not doing. Oh, I'm not showing you guys what I'm what I'm saying. Look right here. This was the trade we took. The maximum we arrived here, we reached it here was, yeah, we left 20 points. It was good. 20 points. The end of the day for us was good. Um, what else? What I was saying is that if it attacks here, this point here, this 752 again, where we entered short, it could be a very good entry for a loan. Why? Because because we tested this once, we tested this twice. If we come here 3 times and and you see the price action, uh, as a bullish price action, I don't see a reason for not to get into the trade. But that's not my strategy anymore. I'm not here. Okay, guys, I'm just leaving. And I hope you guys had a very good day. I had. And I see you tomorrow for sure. If you want to come, I'll be here and we can trade together once more. Okay, I see you guys. Bye bye.